This topic is really, really critical. And what I find is that a lot of people in today's market don't have a lot of experience in dealing with foreclosures. And so there's some basics that we're going to be talking about here today that I'm really, I have a lot of experience in. Myself, I started in the business in foreclosures really in 08 and 09. I started my company in 09, did a lot of foreclosure work, both as brokers, also having been through the process as a principal, and also as a buyer, having dealt with it. I'm speaking today from experience, also having a lot of transactions, whether we represented the buyer, represented the seller, or whether we were the buyer, also having gone through this personally. All right. And when you go through something personally, you really learn. And I want to be able to share some of that information with you all here today. So I'm excited about this. We're gonna get right into it. As today's webinar, it's gonna be very comprehensive. If you do have any questions, be sure to put that into the chat in the questions section. We will be, I will do my best to answer questions as they pop up. A lot of times when I do presentations, I'll do it to where we'll wait to the end and then we get that. But we want to be interactive, and I understand that some of this information will be new to a lot of you. So if you have a burning question, go ahead and put that into the chat in the questions section, and I will make sure I get to that in real time. So this is what we're going to cover today. First of all, understanding the four stages of foreclosure. Now, this is specific to the state of California. All right. Every state's a little bit different. However, the majority of the concepts of what I'm going to be talking about in terms of how you can navigate this process is going to be specific and relevant, even if you're out of the state of California, but particular to the state of California within the laws, the dates. That's what we're going to be talking about, the 4 different stages. Now, who is this for? This is going to be for really primarily 2 groups: property owners that are facing foreclosure or a default situation, a maturity situation on their debt, but also for investors and buyers seeking to acquire distressed properties. I'm really wanting to do a presentation for both groups to where we can create some synergies, because there's a lot of misconceptions about the foreclosure process from both buying and also being in the process. And then as we create transactions for people, further understanding them and understanding them from both sides of the fence will help us to create transactions where there's a win-win for both parties versus just opportunistic acquisition, which I don't teach. I don't like to do as a broker or as a principal. Really like to seek for there to be a win-win situation for all parties involved. And really, the goal is to learn the key stages, learn the timelines, learn the strategies, and be able to take some action steps if you're in any one of the camps. Now, also brokers and agents, if you're on this call or you're on this webinar, this will help you out in running your business. A lot of agents are newer, and if you didn't have a lot of exposure in 2009, 2010, then you may not have a lot of experience with foreclosures. There hasn't been a lot of them in the past 15 years. Things have picked up dramatically. So this will help you in no matter where you are and who you are in the business. All right, a little bit about myself, and I'll be quick here. My name is Steve Peterson. I run Infinity Investments. We're a commercial real estate brokerage and investment firm. I started in November 2009, right in the foreclosure crisis. So I have a lot of experience in this business, because when I started the company, it was really because we were working a lot of foreclosures, and very difficult time to start a business, but it was also for the foreclosure business. We had things rolling, so it was a good time in that respect. I also had an opportunity to serve on a lot of different boards where I've developed a lot of connections, relationships, but also some skill sets that are applicable to what we're talking about. I was the president of Associated Real Property Brokers, which is the Oakland chapter of NARAB, the National Association of Real Estate Brokers, which is the Black Real Estate Brokerage Association. And we are called Realtists as opposed to Realtors. Once upon a time, and when we were formed in 1947, Blacks and other minorities were not allowed to join the Realtor Association. So we didn't have access to the MLS. We didn't have access to, a lot of things. And so we formed our own organization, trade organization, and we are called Realtists. I also had the opportunity to be the president of the California Association of Real Estate Brokers. That's the state board of NARAB for the state of California. And I hold the CCIM designation, which stands for Certified Commercial Investment Member, which I obtained in 2012. But more importantly, I also had the opportunity to serve as president of NorCal CCIM in 2018, which is a great, CCIM is a great designation, but more importantly, it's an excellent network of people in the commercial real estate business who transact business at a high level. So I also attended and completed the Goldman Sachs 10,000 Small Business Program in 2022, which is an excellent program that teaches small businesses how to scale their companies. So if you are a small business and you're looking to scale your company, I would suggest trying to get into the Goldman Sachs 10,000 Small Business Program. All right, and our firm focuses on the acquisition and syndications of multifamily property. We do all full groups of commercial real estate, and we have agents that also do residential real estate. And we have developed. I started the company in the foreclosure crisis, developed that expertise. Now in 2025, the last couple of years, we've seen a real big increase. And right now, this is the highest level of foreclosure activity in the state of California since the old foreclosure crisis and the Great Recession. So this is, why this is very, very important. And you'll see here on this slide, we talked about, well, why is this current now? Outside of the fact of, the trade war that's going on right now, the tariffs and that whole situation, the high interest rates that have came down a little bit, then went back up. We are in a big maturity crisis, and particularly in commercial real estate, a lot of loans are maturing, meaning that when a loan is originated, it has a term. Most commercial loans are going to be anywhere from 3 to 5 years, 5 to 7 years, at the most a 10-year term. And obviously, you're going to get a better interest rate with a shorter term. So most borrowers want a better interest rate. So in that respect, they're going to get a 3-year, 5-year, 7-year term. Usually 10-year terms usually have a little bit of a higher interest rate. So we have a lot of loans maturing in 2024, 2025, which creates this tension. On top of that, when you try to refinance a mature loan, and when you try to refinance that loan with a much higher interest rate, that becomes a problem. And that's a big part of what the challenge that we're facing today is that we have high interest rates, much higher interest rates than we were seeing in 2021 and 2022, where a lot of these loans are now maturing. So that creates a major, major problem. Okay. Also, with the economy being impacted by the trade war, you're now seeing a lot of people in the residential space losing jobs, and those defaults are rising. All right. So we're going to deal with how you can understand the process and how it works. We're going to talk about where the opportunities are, and we're going to dive deep into the 4 stages of foreclosure and see how we can solve problems. And if you can be a problem solver, that's going to help you out, whether you're in the situation yourself or whether you're someone that's looking to acquire properties like these. Big thing I want to kind of stress is being a problem solver, right? Not being an opportunist. And there's a big, big difference, all right? Big difference from being a problem solver versus being an opportunist, right? All right, so overview of the 4 stages of foreclosure. All right, the first stage is notice of default. Second stage is notice of trustee sale. Third stage is the trustee sale auction, the actual auction that happens at the county steps, county courthouse steps, whatever county you're in, state of California. And then the fourth stage, which is the real estate owned stage. This is when the lender has gone through auction, no one bought it at the auction, and now the property goes back to the lender. Each opportunity, each stage has unique timelines and specific opportunities to either resolve the default or either acquire the property. All right. And we're going to be talking in each stage, basically, from both vantage points. All right. Now, let's start with the first one, notice of default. Notice of default is when the lender files, this is all public record, by the way. The lender files an NOD, notice of default, when payments are missed or a loan matures. Now, before they file this, they're typically going to send you a 30-day demand letter. It's going to say, hey, you've missed a couple payments, or hey, your loan is mature. We need you to remedy this situation within 30 days, or we're going to file default. And that's what's especially in residential, and in fact, in residential properties where it's your own home, your primary residence, they're going to send you several letters. In commercial properties or properties that are owned by investors, they're a lot more aggressive, right? And the reason being is because when you own a property that you live in, you're considered to be a consumer, right? So there's a lot more consumer protection laws. When you own commercial property or you're an investor, whether you are or not, you are considered to be an expert. You're considered to be a professional, right? You are not a consumer. So the laws are a lot more lax in this world. So the lenders are a lot more aggressive in general. And also, here's another side note, whether it's residential or commercial, private money lenders are the most aggressive. So typically private money lenders don't lend on your primary residence, but they will lend on, if you're doing a fix and flip single family or 1 to 4 unit property. Obviously in commercial properties, these lenders are a lot more aggressive than a typical bank, because a bank really doesn't want to take your property back at the end of the day. They have certain regulations that when they take a property back, they have to set aside money for reserves so that they don't dry up, they don't run dry on liquidity, right? To be able to service the property. Those are laws and rules. So they're really trying to work things out. A private money lender or a mortgage bank, they don't have the same regulations as a commercial bank. So they can, take properties back, and that's not going to require them to put money on the sidelines. However, they're also not in the business of owning property generally. So they would like to work something out with you as well. Okay. So before this notice of default gets filed, they're going to reach out to you. Biggest key, and I'll reiterate this throughout the presentation, is to maintain your communications with your lender. This can be difficult, especially if they're aggressive. But this is a key for you to be able to work something out if you're a property owner, to stay in communication. If you ain't got it, you ain't got it, right? But you want to let them know about that. You don't want to disappear. All right. And again, I'm speaking from experience of myself, having gone through the foreclosure crisis, having lost a couple properties in that time. Look, I'm speaking from experience, and then having worked some things out with lenders as well. Communication is key. Now, once they file that notice of default, all right, that's when the clock starts. There is a 90-day what's called cure period. You got 90 days to be able to cure this situation. If you're behind on your payments, that means making your payments, bringing it current. If your mortgage is mature, you extended past the timeline, you have to pay it off. You got 90 days to be able to figure out, hey, can we get this thing paid off? Or to negotiate and work something out with your lender before they move it to the next stage. This is now a public process because they have to file with the county. They have to file this with the county. So now this is something you go on the foreclosure list, and this becomes public information. There's databases out there that professionals like us, use to track the foreclosures, and this becomes that public information. So you want to try to work some things out before it gets to this point. But once it gets to this point, this is your best window to try to resolve something. Okay. Because it's a minimum of 90 days before anything can happen. Now, let's go through some options. And I'm going to, again, talk about both sides of the fence, owners and then buyers and investors. Okay. In this period of time, you can also work to negotiate a loan modification or a forbearance plan. A lot of, and since COVID, there's something called a partial claim, which is a form of a forbearance where they can potentially take your back payments and move that to the back end of a loan in the form of a secondary or a junior deed of trust. All right, this will be your best possible option because it doesn't involve you making big increased payments, but it puts all your payments to the back end of the loan. Now, a lot of lenders, residential lenders, primary mortgage lenders, they will be more inclined to do this than if it is an investment property. But I have seen this happen recently with a few of our clients where they were able to get this approved. And but here's the deal. You have to be diligent about this. When they structure a repayment plan, a partial claim, a forbearance, a modification, they're going to give you a trial period to make some payments. And you got to be able to come through on that trial period. All right. Now, if you're not able to do that, this is also a good time to sell the property. All right. To avoid further stages and get things done. Now, listen, a lot of times when you have a property, you don't want to sell it. You want to keep it. All right. Whether that's your personal residence, whether it's your investment property, whether it's your business property that you have to run your business out of. No one generally wants to sell a property, be forced to sell a property or sell a property under duress, right? It's not the ideal time. However, if you got equity and this property, even if you look at it and say, hey, even if I modify it or I get it back on track, I still haven't solved the problem, which is being able to make the payments or dealing with some sort of situation that is causing you stress, then that probably is a good time to sell the property. A lot of times people think, hey, if I sell this property, I may be selling at a bit of a discount. And that may be the case, especially today. However, if you sell at a discount, you have to think about, well, what could I then do with the capital? And this is a conversation we have as brokers with a lot of people because nobody wants to sell at a discount, right? Bottom line. But when you're in this situation, now you're making decisions based on the best case scenario going forward, right? And like I shared with a few people recently, hey, you may take a little bit less than you would if this was at market, price and the market was better. However, you can then take that money and go purchase another property at a discount because we are in a market where it's a little bit of a buyer's market, at least here in the Bay Area, particularly in the Oakland East Bay area, right? And also, what is the price of your peace of mind? If the property, if you get this property current, right, going forward, have you solved the problem that is creating this, that created this default, number one, but also is creating probably a significant amount of stress in your life? I don't know what that cost is for you, but that's something that you need to consider. Because what happens when you're in a stressful situation, it becomes difficult to operate. It becomes difficult to see opportunities, it becomes difficult to see solutions. So if there's an opportunity for you to sell it where you put money in your pocket and you move to the next phase of your life, that may be, this is the time, the optimal time to be able to do that. The bottom line is you got to act fast and you got to, really, you should contact the lender before this NOD is filed. But once it's filed, you got to be working on solutions. The worst thing you can do here is to do nothing, to pretend like it's going to work itself out. And I know so many people that are in a denial phase when this hits. It is what it is, all right? Just be proactive. There is solutions, all right? And I just mapped out several of them, and you want to be proactive on this, not letting things stack on top of you, because the next few phases that we're going to talk about are not as opportune. All right, so for buyers and investors, here is a great opportunity for you to purchase a property before it goes to the auction. I'll explain the auction phase and why that's not the best place to buy real estate. This is also an opportunity to help owners and secure deals before they either get to the market, or if they are on the market, before they get to the auction. Now, as I said at the beginning, this is also an opportunity for you to be a problem solver versus an opportunist. Give an example. I had a property recently and we got a modification approved or a partial claim approved for the borrower. We were put it on the market though, because when he came to us, property was in trustee sale phase. Now, that's the next phase I'll explain. He didn't have a lot of time, so we had to quickly put the property on the market, and he got his partial claim approved. However, we had a couple offers. We had one that we were very seriously about to consider, but it didn't work. We had a couple people look at it, and they offered well below what I feel, and I'm an expert in the market, well below a discounted price. No, we're not asking anyone to pay market price on this because we understand the situation. We're trying to get a fair price, right? Well, their immediate offers were not fair and were really egregious. We're about 200,000 below what we felt was a discount, about 300,000 or so below from market price. So we didn't even respond to those offers. They wasted their time. The offer that we were pretty almost, went into contract on before he got his partial claim approved was one where seller was going to walk away with a couple $100,000. Buyer was going to get a discount. Buyer was also going to take over the seller's mortgage, subject to at a very, very attractive interest rate. That would have been a win-win solution for everyone involved. And I'm telling you, the more you can try to structure deals like that, number one, your reputation is going to be one that, hey, you solve problems, and people that are in this situation, brokers that are in this situation, they're going to feed you deals. So your deal flow is going to be better than the opportunists out there. And then number two, you're just going to do more deals, because you have to get people to take some of these crazy offers that investors make. They really got to be on their last leg, and there's no other options, right? In this case, we had an offer that was 200,000 over these two guys that came in. So we didn't even respond to them. And this is what I'm talking about, because if you can solve problems, you could actually make money day one as an investor, but then you also build your reputation. And brokers, sellers, that word gets around, and that's how you increase your deal flow. And if you're an active investor, you know how challenging it is to get good deals coming your way on a consistent basis. All right. So this is the window of time where you can make deals work. You can also, I want to say this, like what I just mentioned, you could take over properties subject to, where I'll talk about that in the next slide, where you take over the owner's existing mortgage, all the details of it. There's some risk involved. You can ask the seller to carry some financing. All right. Well, you just got to be able to come in and solve that default situation. If you get good at this over 2025 and 2026, I believe you can make a lot of money, but you're going to also solve problems. And I want to reiterate, when you can do that, that is really going to accelerate your deal flow. All right. Next phase. If you have any questions on this stuff, put it in the chat. I haven't seen any pop up yet, but if you have any questions, put it in the chat and I'll get to it. Now, next phase, notice of trustee sale. This is when things are a lot more serious. All right. So the 90-day notice of default window has gone by. And then now the lender files notice of trustee sale. And once they file this, there's a minimum of 25 days that must go by in order for them to then auction off the property. A lot of times when they file this, they'll file this 30 days out. Sometimes they'll file it 60 days out because they're trying to work something out with the borrower. Depends on how, again, your communications with them, depends on what kind of lender they are, depends on what kind of property it is, but they cannot do the trustee sale under 25 days. It has to be 25 days or beyond, state of California, right? So now the stakes are higher. And this is why I talked about the NOD phase being the best phase to potentially work out a deal, because now, in that phase, you are able, you don't have this 25-day, aggressive timeline on your back that's going to create a lot of stress. Right? You have a stressful situation for sure, but now we can work through it. Once you hit NTS, Notice the trustee sale. Now it gets really stressful, and some of the options may be limited. All right. So you want to try to, once you hit this spot, if you're in this situation, you got to really dial it. It is not over. And one thing you got to understand, it's not over till it's over. All right. So you got to fight here. A lot of people, I've seen it over and over again. I've just seen people at this stage give up. Don't be that person, because there's options. The more options you're aware of, the more energy that you can utilize to solve your situation, right? Even if it looks bleak, even if it looks like there is no other way, usually there always is another way. You just can't see it because of the stress. All right. Now, let's break it down. I broke down, okay, limited time to sell or secure financing. So now, especially if you're in commercial deal, a lot of commercial traditional acquisition loans are going to take 60 to 75 days to close. So once you get to NTS, very, very difficult to take that kind of a deal. If you do take that deal, you have to negotiate with your lender. And this is why, if you've been in communication and have a good relationship with them, then they will be more inclined to work with you. If you just go dark on them, they don't hear from you, then it's going to be tough, you know. And listen, I know this is difficult, and that's why I'm keeping to say that, because you may need some support to help you go through this. It's not just easy to pick up the phone and call somebody when things aren't going well. All right. Now, this is when, that being the case, that you need some help here. You need to be working with a broker um, in one way or another, either list your property or to negotiate with the lender. Now, you could also work with attorneys and do all this. You know, attorneys are a lot more expensive. See, brokers, we don't require upfront money. We get paid when the deal's sold, unless you work with us as a consultant. That's where there may be some upfront money, very minimal though, compared to what a attorney would charge, right? But you do need some help at this stage, unless you're a grizzled veteran and you've been through this a bunch of times. But even then, I really think that you could benefit from getting a professional involved, especially because you don't have a lot of time to do whatever it is that you're going to do. And then if you have somebody who is a professional, they can maybe see some things that you haven't been able to see. Maybe they can advise you on some things you haven't been able to think through. All right. That's why that is very, very important. Now, a lender will postpone the auction if they believe that you're going to get this property sold, you're going to get this property refinanced, you're going to get them paid off. You can bring the loan current. That's why you got to have backup, and that's why you have to have a good relationship with them. Now, I didn't put this option on there because I really don't think it's an option, but this is when people at the last minute file bankruptcy to prevent the lender from foreclosing on the property. Right? That bankruptcy is not a real solution to the problem, but it does prevent the lender from immediately taking the property. It just creates a lot of other issues for you. I won't go too much into that, but that, if you are going to do that, you would do it at the NTS stage, right at the last minute, before you worked anything out with the lender. I'm advocating for you to come up with a solution, a strategy, a game plan before you get to that point. Not a fun process, right? So hopefully we can work something out without you having to do that, right? And if we follow some of the steps here, you can solve your situation without having to file a BK. All right. Now, buyers and investors. All right. This is a chance for you to work something out, but you gotta have either the resources to make this happen, or you have to have a creative strategy to get something done. Because in NTS phase, you gotta move quick. All right. And here's what I'm just saying is you need cash or quick financing for deals. So what cash, meaning that, hey, you actually have the cash in the bank that you can wire, or you have, here I say quick financing, that means private money, hard money, and private investors, where you can move quickly. Because a lot of times you just don't have time to get a conventional loan, unless you can work with the owner and you guys can schedule out a time to, well, you can postpone the trustee sale. You just don't have time to close a regular loan. All right. And I've seen it. I've been in contract, especially I learned this the hard way. back in the day, all right, in 2010, 2011, working deals, even short sales or regular sales that were in notice of trustee sale phase, where we had a deal. We were in escrow. I even had short sales where the lenders approved the short sale. We were in escrow. They approved the date when we were closing, and they still foreclosed, right? And I've seen it here recently on a couple of agent deals where they had a contract and they were in escrow. It was legitimate escrow, but lender just didn't postpone the sale, and they foreclosed while the escrow was happening. And that really sucks for everybody involved, right? And a big part of that is, look, when you're in NTS, you typically got to have cash or private money because you got to move quick. Now, another option is subject to, where you come in, you bring the mortgage current, and you take over the seller's property subject to the existing financing. Now, this is not the creative financing webinar. That'll be another one we do. But what essentially a high level summary of what a subject to deal is the deed transfers at close of escrow. This is all done through escrow, title insurance. The buyer gets the deed, seller relinquishes the deed. However, the loan stays in the seller's name, right? It doesn't go to the buyer's name. So this is not a formal assumption. So there's elements of risk because when a loan is given, they have what's called a due on sale clause, meaning that when the property is sold, that loan is due. They got to pay it off, right? This is a subject to is a legal, let me just reiterate that this is a legal process. And if you look at the California contract, whether it's for a home or for income property, there's a box when it comes to the financing section that says subject to. You can check the box. So this is a legal process done through escrow, but the element of risk is that the lender does not approve it. So if the lender catches wind that the deal was done, they could call the loan. What does that mean? They could say, hey, I'm foreclosing on you all unless we get paid off, right? However, rarely do they do that. And this is an excellent, strategy to take over a property quickly, especially if you got 10 days trying to work a deal out. Hey, you can just bring all the money to bring it current, take over the mortgage, put some money in the seller's pocket or have them carry their equity, either way. And then you can say, hey, look, I can refinance this thing in 60 to 90 days. Or usually once you own it, you're probably going to take 6 to 12 months, but you can refinance it in a quick period of time. That's a solution. That is a way for you as a buyer to get in on a deal, solve a problem for a seller, utilize some creative financing, buy yourself time to then refinance. Because if you're trying to do a notice of trustee sale deal, and with the 60 to 30 to 60-day loan, a lot of times you just don't have enough. You just don't have enough time to get it closed. And I hate to see you going through an escrow and you pay for your inspections, you pay for your appraisal, and then they foreclose on you. They foreclose on the seller, and you're trying to buy it, right? That's really bad for everybody involved. That's why we have to take these measures up front. While I'm kind of drilling down on this. All right. Hope everybody gets that, because these first two stages are the best possible stages where we can make a deal for buyer and seller to solve problems, right? And I really I think I've said it multiple times. I keep saying it. If you can figure this thing out of how to solve problems for sellers as a buyer, your deal flow will absolutely increase. And as you know, if you're an active buyer, finding great deals is tough, right? It's like a business in and of itself. You really gotta, and I say as a broker, so I tell my agents every week we have meetings. It's like, look, your number one business you run in the real estate business is finding deals, whether it's foreclosure or regular. I mean, you have to always be finding deals, whether that's manually prospecting or marketing and networking, whatever. You got to be in that loop. Well, if you're an investor, same thing. If you develop that relationship of a problem solver, your deal flow will go up, the amount of deals that come to you, right? Now, third stage. This ain't the fun stage. This stage is dominated by professionals, and this is buyer beware. This is the trustee sale auction. And this is when the county, via the trustee, and again, every state is different. I'm talking about California, the Golden State. All right. Properties are auctioned publicly. Buyer needs cash or cashier's check. It's a cash transaction. It's not finance. When I say cash or cashier's check, when you bid yourself, you have to have a cashier's check that you bring and you show to the trustee who's handling the auction. was a neutral third party hired by the beneficiary, the lender, upfront to handle this process, right? Now, if you don't personally have a cashier's check or cash for the whole amount, what you can do is you can partner, and I'll go into this a little bit. You can partner with professionals. There's companies who buy and sell stuff every single day at the courthouse steps, and you can make an arrangement. They will buy on your behalf, but they want to make sure you got the cash before they do that. And they can also potentially finance you with, you put some money down. But that's where this is not the, oh, I'm going to Bank of America to get a loan to do this. No. Another thing, challenges. There is no clean title. When you buy at the courthouse steps, you are taking a risk. So you need to do your due diligence and make sure that the title is clean. Now, a lot of times the title's not clean, right? Foreclosure wipes out certain liens, but it doesn't wipe out other liens, like mechanics liens. They don't get wiped out as foreclosure, all right? Secondary junior liens can get wiped out. A lot of times, utility liens, IRS liens, any sort of tax liens, mechanics liens, they do not get wiped out at the foreclosure. Very important for you to understand that. All right. This is also a competitive process. It is a bid. It's like an auction you see on TV, 35, 45, 55. It's literally like that. All right. So it's no guarantee that you're going to get the property if you're a buyer here. And this is just a very, now, as from a seller's perspective, and let's get to that. Seller's perspective, well, you really don't have no options once it hits this point. All right. I mean, if the property is being auctioned off, you want to do everything you can do to prevent this from happening. Right. Now, at this point, you just gotta, pay off the full balance or negotiate with the lender, hope and pray that they postpone it. Sometimes they will. I've even had this happen back in the day where there was an agent trying to sell a property. He reached out to me. I had a client that wanted to buy it. We literally, the day before the trustee sale, wired all the money, not partial of the money, all of the money to the seller's lender, and they still foreclosed. And the reason being was they had to see that the money was in their account. They had to confirm that it was in the account, and the money had arrived in their account the day before, but for whatever reason, they weren't able to communicate one department to the next, and they foreclosed upon it. A very, very frustrating situation for everyone involved. All right. But that's why I say the options are very limited here from the ownership side. And we want to do whatever we can do to prevent it from getting to this point. Now, one thing I will say is let's say you owe $200,000 on your property. Well, okay, it's California. Let's say you owe $500,000 on the property, right? And it gets auctioned off, and the minimum bid is, they typically will set the minimum bid at what they're owed, but sometimes they'll set it below that. Depends on the situation. If they at the courthouse steps, and this is something that is a bonus, a lot of people don't know about that. This, if they sell it, let's say for more than they're owed, meaning the loan, the principal balance, the back payments that were missed, all of the default interest, all of the legal fees for the foreclosure, if they sell it at the courthouse steps, at the auction, over and above what was owed to the lender, that overage actually goes to the seller, goes to the owner who lost the property. But it goes through, a lot of times it'll go through a state process. They're not going to just voluntarily call you back and give you that money. A lot of time that money gets into the state and it goes through a process. But knowing, if you as an owner know, hey, I lost my property, I owe the lender 500,000, but they sold it for 600,000. There's actually some money in it for you, but you have to track the process and you have to go after it. It's very difficult to get those funds. All right. But just letting you know, your options are severely limited at this point. For buyers and investors, this is not the best time to buy property because you are going against the sharks and the wolves who do this every single day, right? And so if you're not somebody who does this every single day, it is a big risk for you because, again, you got to come in with cash, right? There's no clean title, very competitive, right? So you maybe think, oh, I'm gonna get this property for 500,000, but then it gets competitive and it goes over 600,000, and maybe you don't have that money, or it doesn't make sense to buy it at that price when you could have bought it in the NTS or NOD stage and before it went to the bidding war, right? The best thing to do here, if you're not a professional, is to partner with professionals. Now, this is not what we do as brokers or investors, but there are people who their whole business is buying and selling at the courthouse steps, right? But I really don't recommend this unless, again, you're a seasoned professional or you work with some seasoned professionals. Even if you work with them, it's very expensive. So there's better ways to do it. But I just want to make you guys aware. All right. Now the next stage is the REO, real estate owned. This is when they went to the auction, they tried to auction it off, but the property goes back to the lender because nobody wanted it. And in 2008, 2009, we had a whole bunch of these, right? Because the market, a lot of times, the market fell down so much that the price the property was being auctioned off was not worth, it was more than the actual value of the property. So you had a lot of these situations and scenarios where the properties were coming back to the lenders. And this is why so many lenders went out of business, because as they're taking these properties back, once they have a lot of properties back on their books, now they have to put money aside for these properties. That's money that they cannot then go lend out to people. And that's money, if they're a bank, they can't go give to people if they're coming in and asking to take their money out of the bank. That's why you saw in 2007, it began with a whole slew of residential banks going out of business, getting swallowed up by bigger banks because they just had too many REOs on their books, too much distress, and they didn't have enough liquidity, right? And this is why a lot of times the lenders don't want to take the properties back, especially if they are a bank, right? They don't want to get to this stage. And if they're a regular lender, like a mortgage lender or hard money, they don't have that same regulation as a bank does. But what they generally are not in the business of owning properties, because once they take the property back, now it's their property. So property taxes, they got to pay the property taxes, they got to pay the insurance, they got to maintain the property. A lot of cities like Oakland and San Francisco will fine you if there's vagrants, or if there's issues at the property, they're going to blame you. So there's a lot of liability for the lender. That's why this is a great time to try to strike a deal. Now, residential properties, if you had a Fannie Mae or FHA or Freddie Mac loan, these properties will be offered to only homeowners for the first 25 to 30 days, state of California. All right. So again, if you're looking to purchase properties, this is a great time to be able to purchase them. Now, a lot of times these properties will, especially residential, they will be listed on the market. Residential lenders typically have brokers that they work with, and as soon as a property gets back, they get it with a broker because they want it to go through this process. However, commercial real estate is not the same. They are looking to get a deal done. They also have brokers that they have a list of brokers that are approved that they work with. They send it out to the brokers. But if you can get to them before it goes to the market, a lot of times they will, if the number you offer them is satisfactory, they will take a deal. And I've done a lot of deals like this back in the day where we were tracking a property and went to auction, and we made offers directly to the bank, and wherever we get those offers taken. And a lot of times for banks, they will work with you, and if you can get them the right number. Now, cleaner, the title is cleaner. It gets delivered to you. You're not going through the auction. When you close escrow, you should have a nice, fresh, clean title. You can do your due diligence. It is an as-is sale, right? And understand that the the lenders may not have all the information about the property. Like if it's an apartment building, they may have a profit and loss statement and a rent roll from when they originated the loan, but they probably don't have an up-to-date profit or loss statement or rent roll, right? So that's important. Now, if you're an owner and the bank takes it back at this point, you no longer own the property, right? If and they didn't auction it off and sell it for more, so you don't have that opportunity to get that overage. Now, here's what, especially if this is an owner occupied situation, if you owned this property was your primary residence, a lot of people did not know this in 2008, 2009, and so they abandoned the property. And that was a huge mistake, because a lot of times you may be entitled, and maybe entitled is not the right word, but you have the opportunity to get what's called cash for keys from the lender in order to relocate, because you live there. Foreclosure is when they take the property from you, the ownership of the property. But if you live there now, you still have possession of the property. And so a lot of times you will be able to get cash for keys. We had a situation recently, we were working a short sale. The lender just would not reduce the price. The property needed a lot of work. They would not reduce the price to the market price, or they would not reduce the price to a price where investors wanted to buy it. So the lender took it back. They went to auction, didn't sell at auction, they took it back. Well, the lender came and they provided a very nice cash for keys to the owner, and that helped him to go and get another residence. And they will typically like to do this as opposed to eviction, because they're going to spend typically that money or more on an eviction, and it's going to take longer. So if you do lose your primary residence, they will be willing to, a lot of times, 9 times out of 10, to work a cash for keys situation out for you, and that could at least help you to get back on your feet, get you another place to go. And a lot of people did not know this back in the day, and so they just abandoned, right? They abandoned everything, left the property trash, they did all this stuff and didn't get nothing out of it, when they could have at least got maybe 3 to 5 grand, 5 to 10 grand depending, to where they can go and rent a new place and just get started, right? It's not the equity you were looking for, but it can be a fresh start. All right. For buyers and investors, all right. Now, this is where you have a great chance to pick up great deals, especially in 2025. If you're seeing REOs hit the market, you want to try to get these deals done, because the market is down, at least in the Bay Area, particularly in the East Bay. So when a lender takes a property back, they're just trying to get their money back, or they're trying to minimize their loss. They're not so concerned with the market value of the property like a regular seller is. All right. Now, if you can get to this property before it hits the market, like I was saying, that's the best chance you can do. Or when a property hits the market, it's been on the market for a while. There you go. Because a lot of times lenders, they don't want to take a loss. They want to try to minimize their loss. But if the property value came way below where their what they lent out, they are going to take a loss, right? So sometimes the properties will sit, and so then that's a great time where you can come in and make an offer. Now, you gotta remember this, is that you gotta be a problem solver here. A lot of times I've got an REO property listed now, and we've had a couple crazy offers, and I'm just like, the seller's flexible and negotiable, but they're not gonna give it away for no, you come with an offer with no basis on where you are. Um, they're not gonna, and then they're gonna remember you. That's the thing. If this REO world is a small world, and it has changed a lot. A lot of the people I worked with back in the day are either retired or not working there anymore. So it's a new, fresh batch of people. They remember you. They get an offer for you on this one property, and they have another property, and they're gonna be, oh yeah, no, we're not even considering from XYZ person because they're a low baller, and they didn't even like explain to us why they were coming in. You're coming in with an aggressive offer. You need to like summarize your offer, how you got to that point, and why it solves a problem for the seller. Not just, hey, I'm just coming in with a rock bottom price because you foreclosed on a property. Even if it's a difficult property, you got to be able to break it down and explain it. All right, very, very important. And key to remember here, banks are motivated to sell in 2025. It's a slower market, right? They are motivated to get something done and a little bit more flexible. Sometimes a lender may even be willing to extend you credit in the form of seller financing, because they are a lender. They don't want to do that usually. They want to get rid of this thing. But they also are realistic in the sense of, hey, maybe nobody's paying cash at the price we want it. So maybe the price, in order for us to get the price, we can extend credit to a qualified buyer. And those terms could probably be a little bit generally better than you can get it in the market, particularly today when we're in a higher interest rate environment. If you can get a seller to carry at 5% where you were looking at, 6.5%, well, now you've created alpha, you've created return, just based on the financial engineering of the deal. So that's a great opportunity that you can do in REOs. I do see an uptick for sure in commercial real estate, but I'm also seeing an uptick in residential real estate properties that are on the market, that are going back to the lender right now. So this is going to be a great opportunity. I don't think it's nothing like 2008, 2009, y'all. It's nothing like that. People have put money and actually qualify for these loans now. Back in the day, People was no money down. People didn't qualify. So when the lenders were cut, that's why people just abandoning and walking away. People are not abandoning. They're not walking away. Uh, People are trying to figure things out. That's why the theme to this presentation is being a problem solver. Being a problem solver will help you to get more deals done, help you to build relationships with sellers, build relationships with lenders, build relationships with brokers that will increase your deal flow. As a property owner, being a problem solver will help you to get out of your situation sooner, more effectively, more efficiently, and will also help you to move on to the next stage, right? Nobody wants to lose a property. Nobody wants to sell at a discount. What you do when you get in a situation is you just got to get real. You got to get really real. You got to get truthful with yourself and make your next move your best move in the sense of creating a better situation than you're in right now, right? And that could be hard when you're going through it, but the whole point and the whole premise here is moving forward, right? And having lost properties before. Again, I speak from experience. It feels like hey, you're in the mix. It feels like it's the worst thing in the world, right? And then sometimes you look on the other side of it, like, all right, well, it's not the worst thing in the world. And yeah, maybe my credit's impacted. Maybe I lost a bunch of money. Maybe I lost a property, but there's a better way. If you can do that up front, though, while you're in the process, you probably can walk out with some capital, some cash, maybe not all your equity, maybe more than all your equity, but that where you can take that and do something else more productive. All right. Now, key takeaways, or as we wrap up, NOD stage 90 days. That's the best time to work something out. As a buyer, seller, investor, broker, lender, this is the time. Let's put our heads together. Let's figure some things out. NTS, not the best time to, especially if you're a seller. A lot of stress, 25-day countdown, time to get serious. All right. As an investor, time you got to have some quick money situations, creative financing situations to solve problems. Brokers, we got to act quick. As brokers, a big part of what we do for sellers is we hire us, but then we get authorized to speak to the bank on their behalf. All right, brokers and agents, if you haven't done this before, you want to align yourself with a broker who has experience, because we can talk through the banks a lot of times. Because at the end of the day, if the bank or lender forecloses, what are they going to do? They're going to hire a broker to get the property sold. If we're there being preemptive, a lot of times they will work with us. All right, but you got to know what to say. You got to know how to conduct yourself, and you got to know how to deal with these folks. All right. Now, auction, very high risk, cash only. The pros dominate. We're trying to avoid this situation at all costs if you're an owner. If you're a buyer, look, unless you say, hey, I'm going to go and master this process, really not your best bet for buying. I know a lot of very sophisticated people who rarely, if at all, buy at the auction. I also know people that's all they do, right? And if you're going to buy at the auction, you either want to be like that's all you do, or you want to partner with somebody who that's all they do. All right, REO typically is a great time for investors to structure very creative deals, all right, and get clean title. All right, but this is where now you're working with the bank and you're solving problems for lenders and you're solving problems for institutions. I would very much for us to solve problems for people. Wouldn't you agree, or would you disagree with that? Let me know. I think if we can solve problems for people, versus the institutions, we can just, we can make money, build a reputation, and look, at the end of the day, you have much better sleep that way, right? Solving problems with people is great. All right. And the key here is work with professionals. Work with professionals at any stage to get the best results. I really think that's important, even if you're a professional investor. I work with in commercial investment property, mainly professional investors, meaning this is what they do. This is what they, how they roll, right? And this is what they are. So in that sense, there's a lot of a misconception in the investor world that working with the agent, you don't need to work with agents, you don't need to work with brokers. And a lot of investors, you can find deals on your own and do all this stuff. But if you're going to be in the business, all the top guys and gals in this game have go-to brokers and agents that they work with to bring them deals or to sell them deals. That's just how it goes, because we are on the firing lines. We're on the front lines of this thing, right? And you can always get more. You can always get more done through a team. Imagine in the football team, if the quarterback was it was 11 quarterbacks on the field, right? Trying to throw the ball to each other. Nobody's blocking, right? So you can't even get the playoff, right? But if you got a line, You got receivers, you got running backs, you got a quarterback. Now we can flow. Now we got a shot. We got a chance to do something. We got 11 quarterbacks on the field. It's going to somebody getting hurt. All right. And it's not that fun and it's not going to be great. All right. So that being the case, I really, appreciate y'all for being on this webinar. If anybody's watching on YouTube, really appreciate it. I think, look, if you're facing foreclosure, we can help you out. Connect with our team. We work as brokers to get your property sold, but we also work as consultants. We can help you to work on a loan modification, a loan forbearance plan, a workout. All right, there is some upfront cost, much lower than an attorney, and it's something that where you can work through your situation. If you're seeking, and Mark Johnson raised his hand. I look like Mark Johnson has a question. If you have a question, go ahead and put it in the chat. Let's see if I can get to that. And also, if you're in distressed property situation, if you're looking for distressed properties, then you can always, we can reach out to us. That's a big part of what we do. All right. We track the notice of defaults. We track the trustee sales on a regular basis. The big part of what we're doing. What I would say is book an appointment with us. You can book an appointment here. You can book. Okay. Well, hold on. I got 2 questions and answers. Let me come to the Q&A. Okay. Mark Johnson asked, difference between a loan mod and a forbearance. Great question. All right. I'm going to answer it and then kind of, I'm going to type my answer, but I'm just going to answer live. Loan modification. This is when they modify the existing terms of your loan. So let's say you have a loan at $500,000 at 5% interest during 10 years. Well, this is where they can come in and say, all right, well, we'll take your 5% interest, we'll make it 3% interest for a period of time, right? Or we'll take the, principal balance from 500 and we'll knock it down to 490. Now they rarely do that. They usually will play around with the interest rate more than the principal. They'll lower that interest rate and get it done, get it down so that you can make the payment. All right. Forbearance plan is when they say, hey, you're behind 20,000. Here's what we're going to do. We're going to take that 20,000 and we're going to divide it up over 12 months, and you're going to make payments on top of your regular payment. You're going to take that 20,000 divided by 12, add that amount to your monthly payments, and you do it like that. Right now, there's something else that's newer that came about as COVID called the partial claim. Partial claim is, hey, you're late 20,000. All right, well, we'll take that 20,000 and we're going to put it on the back end of the loan, meaning that they're going to create a deed of trust for 20,000, put it on the property. It's junior to the original loan. And then you pay that loan off when you refinance or you sell. You don't have to make monthly payments. That is the best possible situation for that is basically a new age forbearance plan, if you will. Generally, that's not going to work on commercial property investment properties. Although I did just seen this happen in our office in the last week, so in the last month, where a client did get a partial claim approved on a 4-unit investment property. Very rare, but it did work for that client, right? And a modification. They did a lot of modifications back in the day. They are really, to get a loan mod approved is very difficult, but they will be able to do it. So that's a great question on what the difference is between loan mod and forbearance plan. And listen, book an appointment with us. Whatever you are, owner, looking to buy, you're a broker, agent looking to get in the game, book an appointment with us so we can share with you some solutions. And particularly as a bonus, I will share with you, if you're a buyer or seller, I will share with you our system of what we use to pull up properties and what we use to track properties and how we do that. Now I don't give that away on this because that is kind of a proprietary, as part of our proprietary system. But if you book an appointment with us, we'll sit down and I'll give you some access to how we do it and how that can be very beneficial for you, because it's very important for you to know all your options when you're in this in this process. Okay. Looks like there's another question. Let me see on the Q&A. Mark just says, thanks. Reba's, hey, Reba, what's going on? Say, if the people are reasonable. Yes. Now, one thing on that, Reba says, if the people are reasonable, look, we get into this world of distress. There's a lot of stress in distress. And what happens is a lot of people are no longer reasonable, right? And it's difficult to work with people. I'm really, and look, 2025, end of the day, this is a very difficult time for us all. I don't care if you got a Fortune 500 company. I don't care if you got one house you're trying to flip. I don't care if you live in a house, you work at Home Depot. There's challenges in the marketplace. I'm working through, I got a couple properties that we have now. We're working through a bunch of challenges. We're working through that as brokers trying to sell property. Trying to sell property today, right, is very, very difficult. The best thing that I see as a path forward is being able to think with a clear head. Very difficult to do that if you're operating on your own, you're in a situation and you don't have any help. Even the smartest of people need counselors, right? In a multitude of counselors and advisors, there's wisdom, right? So you need to book an appointment with us, right? Book an appointment with us. There's no charge. We'll work through, hey, if you want to find properties, we'll show you our system of how we do that. If you're in a situation, let's talk about how we work through your situation. Get options, get help, get feedback. Don't bury your head in the sand, right? And if you're trying to do deals, just don't be an opportunist. Be a problem solver. But here's where I will say, when you're looking for deals, you do need to be aggressive in the finding of deals process. Again, this is where we can help you out with that. But they're not just like, and back in the day, in 09, 2010, you would look up and pull up MLS, or you pull up LoopNet or CoStar on the commercial MLSs, you would see a plethora of REOs, short sales. There was no shortage. Today is the most increased activity in foreclosure since the foreclosure crisis, but it is peanuts compared to what it was back in the day. It is minuscule compared to what it was back in the day. All right. So you have to then, if you're looking for these opportunities, you have to really look for them. You have to know how to go after them. You have to know how to make these things. You have to know how to, create solutions. And your best bet for that is to work with some professionals. So I hope this was helpful, you guys. It's a little bit over 2 o'clock. I wanted to make sure I got y'all out of here in an hour. I really appreciate your time. I really appreciate everyone that logged on. I hope this was helpful for you all. If it is, please share it with somebody. This video will be coming out on YouTube in a couple of days. If it was something you got some value out of, share it with someone else. If you know someone that's in a situation, refer them over. This is not an easy period of time, but we can get through this together. And I really appreciate your time, and best of success. Have an excellent day.